Jobs numbers disappoint, gold jumps to the upside, then retreats. I got Rich Ilczyszyn from iiTrader on the line with me now to talk about it. Rich, thanks for joining me.
You bet, Alex, anytime.
So jobs number really disappoint analyst expectations. Obviously, they say weather played a part with the U.S. getting smashed with horrible weather for the last month. Now, gold had a big jump at $10 immediately after the news broke, then it seemed to retreat. What do you make of gold's move today after the jobs numbers news broke?
Well, listen, this is a hedge. Most institutional clients are revisiting gold, at least entertaining the idea. They haven't quite loaded fully in, but we've noted that here in the last couple of weeks we've seen a net long increase by hedge funds, big players, by up to 40% from the previous weeks. So there is some value down below 1250, down to 1180. Everyone's looking at the double bottom. It becomes a low-risk trade against equities. And I think that gold has found a pretty good base of support. We still have a lot of hurdles to clear on the upside. We've got the 200-day moving average. We've got the trend line around 1320. Once we can start breaking above these levels, I think you're going to see a lot of people get interested in gold again. Obviously, today's numbers were what the equity bulls did not want to see. And in fact, if you dig a little deeper, it was the revision from the prior month that I was betting on, because I knew that this month would be potentially weak, or this number would be potentially weak. But the December number was so bad, we felt that there would be a nice upside revision, which would actually, probably set the market up to the upside, the equity market to the upside. Irregardless of what equities do, I'm buying gold down here, and I'm basically looking at it like it might be a trade that I have to stick with for a while, but I think at some point this market's going to get above those hurdles to the upside.
Right. Now, next movement for gold, where do you see it coming from? Where's the fuel? I mean, there's always the Fed, there's central banks, there's Europe. I mean, is there anything else? Where do you see it coming from in the next couple months?
Well, listen, if you start trending with weaker data, which potentially in the next 60 days if we do, I think you're going to get dovish statements out of Janet Yellen, which then drops the dollar against other currency, which then will support gold at these levels. For me, basically I'm looking at it like if we break 1180, I'm out of the gold. Okay, there's a double bottom there, technical setup to the upside, and I think potentially with yields coming back down in the 10-year to 2.6 and into that area, away from the 3% area, gold becomes attractive. It's not going to be an easy trade. The days of buying gold and in a week or two it was up, as we did back, when this bull market really started, those days are gone. You have to be a little bit cautious here, pare down positions, but you have to have it on, because when it starts to move, it's going to be one of those big moves.
All right, let's wrap up with gold's resilience now in the early weeks of 2014. Usually the first couple weeks of January of any year give a bit of a pop to the metals, but now this has continued for 5 weeks. A lot of analysts said that maybe this would be a tough year for gold, not necessarily calling the end of it, but certainly lower prices than we're seeing now. Where do you see this resilience coming from the yellow metal?
Well, listen, I think a lot of us got it wrong right out of the gate for the first part of the year, including me. I felt that equities were probably going to take off, gold was going to be subdued, the volatility shrinking, and maybe a sideways trade, around 1230. And I was wrong. The equity market really paired some of its gains. I didn't expect the magnitude of the 5% drop here, and I think that's going to be your support for gold. Hedge funds are going to be looking for other safety assets. We see that the yields are dropping in the 10-year, which indicates to us that money has come out of equity short term, and it's being parked until we can get through this. February, we've got the debt ceiling talks and a new Fed president, which is adding volatility to the market. Once we get comfortable with her and understand how that's going to work, as long as the data is softening, I think that's going to be supportive for gold.
Great stuff, Rich. Thanks for chatting with me today.
As always, thank you.
And thank you for watching. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com, or you can follow me on Twitter at @Alex_Letourneau. Also, let's take a second to wish luck to both our Canadian and American Olympians at Sochi. They'll be battling each other and horrid conditions in their living spaces. Cheers.